Hello from Santiago, Chile, and welcome to this episode of Crossing Borders with Nathan Lustig, where I have conversations with entrepreneurs doing business across borders and the people who support them, with a focus on people with a connection to Latin America. My guest today is Cristobal Perdomo, a Mexican entrepreneur turned investor who has spent his time between Mexico and Argentina. Cristobal started his career in finance and traditional business, and then made the jump into the tech world as a member of the founding team of Grupalia in Latin America, a Groupon clone that grew from zero to hundreds of employees in 8 months before being acquired by Peixe Urbano, a Brazilian competitor. Next, he led the Navent team building real estate and jobs classified sites across Mexico, Peru, Ecuador, Panama, Venezuela, and Costa Rica and Brazil, growing revenue more than 15 times under his watch. He took what he learned building and scaling a regional Latin American tech company, getting a company acquired, then doing acquisitions and growing teams across borders to co-found Jaguar Ventures, an early-stage venture capital firm focused on Mexico and Argentina, which has many investments across the region. We talk about how the tech scene in Latin America has evolved, the role that venture capitalists can play to move the ecosystem forward, and where he sees the region going in the next few years. I hope you enjoy my conversation with Cristobal. Hello, Cristobal. Welcome to the podcast.
Thanks. Happy to be here.
Yeah, it's great. Thanks for taking the time. Excited
My pleasure.
Get into it. So where are you today?
So I'm in Buenos Aires, which is one of our two offices. The other one is in Mexico City.
Nice. And where are you from originally?
I'm from Mexico originally, but I've been living in Argentina for the last 10 years and traveling all around South America for those 10 years as well.
Nice. Where in Mexico?
Mexico City.
Cool. And what are you working on today?
So we're raising our second fund, our second VC fund. Our first fund was raised 3 years ago, and we've invested in 8 companies so far. We're closing on 2 more, so that's a final portfolio of 10 companies in the first fund, and hopefully be able to do that in a larger scale with the second fund.
And what kind of companies did you invest in the first fund?
I mean, we don't have a sector focus, so we're pretty agnostic in that sense. It's more of an opportunistic take. For example, our first investments were in fintech when fintech wasn't glamorous at all. Right now, we haven't done any fintech lately. We're looking more at some SaaS companies and some e-commerce, those would be the two we're looking at right now. I think a problem with going with whatever's hot at the moment is that it usually gets pretty expensive. So we're in that sense, we're a bit of a value investor. We look at what's intrinsic value and not really reflected in the price.
Yeah, no, I think that's right. Especially if you're always chasing the next hot thing, you're never going to get the value deals and really, know what you actually want to invest in.
Yeah, I think it makes sense when you have a lot of money to invest. So you can go on a spray and pray, and you hope that one of those winners is going to pay for them all. So if you invest in the platform for, let's say, ride-hailing, you probably invest in 3-4 companies, and one of them is going to hit it big. We don't have that kind of money, so we have to be pretty strict with our investment criteria.
And how much money did you invest in the first fund?
The first fund we raised was $10 million, and out of that we invested around 60%, which includes a couple of follow-ons in the portfolio companies. So we're saving around 40% for the follow-ons. In total, if you look at it from the beginning, we invested around 35% in the first tickets, and then about 65% is for the follow-ons. Yeah,
that's about where we are too. I think it makes a lot of sense to follow your winners like that.
Yeah, I think otherwise, like I said, spray and pray, I think it's hard to do outside the US because the size of exits is not as large. So you need over $1 billion exits for that to work. And I think in Latin America, unfortunately, that's going to be far in between when it happens. So we're not doing that.
And you guys are one of the few funds like us that are fully private, that have fully private capital. Why did you decide to go that route?
Well, I think it was in the beginning. It wasn't by choice. We tried to do a couple of the public programs for funding, and for some reason we weren't selected. And then when we looked at we took a deeper look at the public options for funding, we saw that they were a bit restrictive on what you could invest in. And we think that it's hard enough picking investments when you don't have any restrictions. So having those, I think, would have made it a little bit more difficult for us. So we decided for this first fund to just go without that.
Yeah, that's more or less our reasoning too. We just thought that if you look at the types of restrictions that come on deals, we couldn't have invested in our top 7 companies if we would have had Corfo money from Chile.
Okay.
Because based on sales or based on geography restrictions. So it's exactly like you said. I like that quote a lot. It's hard enough already to pick good companies, but then when you get restrictions on top, it's even worse.
It gets worse.
Exactly. So what made you decide to get into venture capital investing?
So, yeah, to give you a brief history, when I did my MBA applications almost 20 years ago, one of my essays was that I wanted to do venture capital. I didn't know probably anything about it. I just had read a lot of the publications at the time. It was an internet boom, so you had big magazines like The Industry Standard or Red Herring, which were magazines, I don't know if you recall, but they were 300 pages thick. And it was all about how this was the next wave, right? It was going to change the world. So I just want to be a VC without any idea what it was like. So I went with that idea to business school. Fortunately, got diverted to other things during business school. So I did a typical cross MBA, consulting, then strategy work at a large corporation, and then worked my way back to doing internet stuff in 2010. I was part of the founding team of a company called Grupalia, which was a Groupon clone. And I fell in love with it. The fast pace, how much of decision making in this industry is data driven, and how fast you can see the impact of what you're doing. So after having exited Grupalia, which we were very lucky to sell to Page Urbano before the whole meltdown, I went on to join the founding team of Navent, which is an online classifieds company. And we were able to build a very nice real estate business there. And but something kept recurring, both in Grupalia and in Navent. We had US and Europe-based investors. And for some reason, when we spoke about countries that were not Brazil, they sort of glazed over it. Right? That wasn't really important. They were only want to hear about Brazil. So that started building in my mind a seed that said, there's got to be something here that no one's looking at. Right? I mean, Brazil is a very important part of the region, and it's in our 2 companies, it was more than 1/3 or 1/4 of the whole operation, but you still had 3/4 or 2/3 that were outside of it. So that's a pretty big chunk, and even though it's different geographies, if you put them together, it's a very interesting market. So when I was at Navent, I started exploring that with a good friend of mine, someone I've known for a couple of years, and we thought that we had enough to put our fund together because we had the pipeline. We just had to get the money together. So with no idea, we started to build that, and it took us a long time, probably almost 2.5 years. But we were able to secure that first fund.
And so going back to the decision to go from the sort of more traditional career path that you had been on ever since business school and go back into tech and be on the founding team of a company, what was that like, and how were you able to make that decision?
Well, I think it was always at the back of my mind. I think it's been very different from when I was in business school, right? At that point, there was no internet company that recruited on campus. I mean, not even Microsoft was recruiting on campus. There was no private equity or venture capital funds that were recruiting on campus. I think that's also very different nowadays. So there was like no clear way getting there, right? And it seemed to be something that you just lucked into. So I really never gave more thought. I still loved technology and loved the internet. So when the opportunity to join the Grupalia team came along, I said, I have to take this and see what it's like, and see the other side of the table, and I really liked it.
So I know the story fairly well of the Groupon clone from Chile that grew really fast and ended up getting acquired. Did you guys have a really fast growth like that?
Yeah, I mean, it was pretty crazy. The company was started in May 2010, doing just Barcelona, right? 2 weeks after that, they opened Madrid, and then the next month they opened Italy, right? And very fast, they were able to secure 5 million euros from some of the backers of Privalia, which the same founders of Privalia were the founders of Grupalia, only they weren't operating it. They were just chairman and investors. So when they raised that money, they said, we have to go global, right? So it wasn't enough to go open Europe, but it was enough to open Latin America. So that's where I came in. I was there in early July, so they had been open for about 8-9 weeks. And we grew really fast. I mean, between July 2010 And February 2011, we opened 6 countries in Latin America: Brazil, Mexico, Argentina, Chile, Colombia, Peru. Sales grew really fast, like that first half year. In 2010, we did probably around 25-30 million euros in gross revenue. And then the next year, 2011, we were close to 130 million in gross revenues. So it grew really fast. It was pretty crazy. Unfortunately, another thing is that startups, you're trying to prove that there's a business model, right? And it can be a profitable business. I think for us, it was pretty apparent about a year into it that there was no way the economics were going to work. So that's when we sort of switched to see how we could sell that operation.
What was it like being in such a fast-growing and fast-paced environment after having worked in more traditional business for the rest of your career?
Well, I think for those who have gone into consulting or investment banking and then go into corporate, you feel like it's a huge change, right? Because deadlines are much more lax. People are not in a hurry as when you're getting paid by the hour. So when you go from consulting to go to the corporation, you sort of start running on the sand, right? It's like you're putting in a lot of effort, but you're not making a lot of progress. So getting back to the startup life was like getting that adrenaline from the consulting days, but being able to see some results, right? So it was a great mix from having the corporate and the consulting part together.
What would you say would be the top couple of things that you learned from one, just being on the ground floor of something that grew so fast and was kind of a global phenomenon in the business model, and also just the amount of people that grew that fast? What did you learn that you can use when you're investing in startups and mentoring startups today?
I think one thing we in Groupon, we raised about 130 million euros. So it was a lot of money. And we had some heavyweight investors like Index, Insight, Nauta Capital from Spain, La Caixa. And I think one thing we learned was that we followed too much of what the VCs told us. I think the VCs were a bit of bullies with us. And they sort of said, you have to do this, even when we felt it didn't make any sense. But we always thought, well, these guys are the ones with the money, right? They've done this a couple of times, so we should follow them. I think that's something we do very different now that I'm on the other side of the table. I think I tend to listen a lot to the founders, and really, because they're the ones that have their feet on the ground. They're the ones that seeing the reaction from the clients and from the customers and from their team, right? So even though the express sheet can say X, it's not what's happening in the real world. So I think you really have to put a lot more attention on the entrepreneurs and give them the rightful place at the table.
Yeah, I like to say that and what we've seen from our portfolio is that the entrepreneurs that listen to us 100% of the time are just as bad as the ones that listen to us 0% of the time.
Exactly. I think there's got to be a healthy mix between following directions and putting up your stick in the ground saying we got to go this way.
Exactly. And so as you were building the company and raising the money, putting staff into teams, and sort of transitioning into the sale of the company, what was that like? Because there aren't that many companies that have operations in LatAm that get acquired. How did that work?
I think, unfortunately, it wasn't a smooth transition. It was something that happened like really fast. Like I remember in late October, early November of 2011, after we'd been for a little bit over a year and 3 months with the company doing this, that we saw our burn rate got up to, at the worst point, it was like 700,000 euros per day that we were burning.
Wow.
And so, I mean, I said, this is ridiculous, right? I wasn't as familiar with the European operations just because I wasn't on day-to-day on those, but I couldn't see how that makes sense for Latin America, right? You didn't have the internet penetration, you didn't have the margins. It was just never going to make it. So I sort of convinced them that they could keep on with the European operation. That's what happened. That we only sold the Latin American operation. So they kept it with the European operations until last year. And when we did that switch, it wasn't an easy switch, right? It was probably a couple of weeks that we fought the investors on it until they came around. And it also was there's also a lot of luck in the timing, right? At that same time, the company that acquired us, which was Peixe Urbano from Brazil, they had raised a very large round from Morgan Stanley and Tiger Global, and they were using that round to go outside, right? They had come very late to the Latin American regional game, so which is a recurring theme with Brazilian companies, right? They're usually too focused on Brazil. So we were very lucky that when they wanted to come out of Brazil, we were there to be the only one selling. So that was a lot of luck involved.
And so what did you do after the company was acquired? Did you stay on for a while, or did you go into something new?
No, because they all had already started operations in all of the countries we were in. They had their own country managers, so they only kept more of the commercial staff and some of the back office staff, so they didn't need the management around. So we were free to leave as soon as we sold. And what I knew was that I had gotten hooked on doing internet stuff, right? So I looked around to see what I could join a startup or think about doing something or what was out there. I came across the founders of Boomerang, who were transitioning from just having the jobs classifieds business to forming a holding that would have jobs in real estate. And I was lucky that they needed someone to help them run the operations outside of Brazil. So that's how I joined them.
And what did that look like? Were there operations already in the rest of LatAm, or were you starting from scratch?
Well, there was something that I think it's unique in internet in Latin America is that we didn't do a single company. We acquired all of them. So when I joined, they had acquired a very large company in Brazil. They had acquired basically a domain in Ecuador, a small site in Peru, and a very small site in Mexico. At that time, we joined the Latin American sites, these three sites, were doing probably around $800,000 in revenues, and they were losing over $1 million, right? So I thought that that it was a great opportunity to just get on a great wave. Right? I didn't think there was so much that you had to do. It was just ride the wave and put a little bit of order in the house. So we were able to grow that from those numbers to almost $16 million of revenues by 2015, and having a positive EBITDA of over $3 million in just 3.5 years.
Wow, that's quite the turnaround. And so that model, like you said, is not very common in LatAm, where you have sort of a roll-up of different companies and then try to turn them around and run them as a business.
I think I also, unbeknownst to me, I think I had the right skill for that because of my previous background. So it was a bit of a consulting private equity stuff where what we did was, we took the management that we acquired. So always the founder stayed, but it was very fast that we learned that they weren't the right person to run this as a professional management, right? Just because they have different incentives. Unfortunately, that model rested on having all the centralized operations in Buenos Aires and using the outside office more like a commercial office. So the thing was that these guys, they weren't going to be doing anything regarding product or things like that. And I understand that a lot of founders don't want that, right? They want to be the ones driving the platform and driving user interface and things like that. So a lot of these founders, some left by their own accord, right? They said, I don't want to do this. And others we had to push out, right? Because they also were in a comfortable position with a nice salary. So it was very much a bit of a turnaround in that we had to rehire the whole management team and then build from that, build great teams. And that's what basically created the sites. It wasn't that we did anything special, it was just have a great commercial team, have a great product, and just distribute it, scaling it.
One of the things that's probably not special for the rest of the world, but is sort of special for Latin America is just even the fact that you're going to go acquire some small companies to try to make them big. Why do you think that they were willing to do it, and why do you think that that's not more of a common strategy in Latin America?
I think it's a great question. I haven't thought about it. I haven't seen anybody else try it as well. I also think it was a particularly, the way it was set up, I think it's very hard to replicate in the way we were funded, right? Because we had, as our main investor was Tiger Global, and they had some extra money from other funds. They wanted to invest in Latin America, but they knew it was going to be very small value acquisitions, so they couldn't go and do very small deals that were less than $1 million, and they have to spend like 50 or 60 deals on that. So the way it was set up is that they had the money. We just had to find the companies, have them approve them, and then just give us the money to buy them, right? I think that's something that's going to be very hard for a company nowadays, just because you don't have the background for doing corporate development at most of the startups. People have a hard enough time with operations as to get along into finding companies and buying them. And then I don't see that funding, the investors that are funding this are going to be willing to give you money and go out and buy something. So that makes it really difficult.
Yeah, if you can't get the money to go out and buy, it's not going to happen.
Yeah, I think that's something definitely should change, because when in our raising the first VC fund, we spoke with a lot of private equity funds in Latin America that are just focused on Latin America, and they have usually that problem with the ticket, right? They want to invest something that's over $10 million at least, and there's not a lot of internet ventures you can invest that in. So I think they should be more open to doing some of these roll-ups. And I think particularly in fintech, something is going to happen just because fintech is so regulated, so that whatever advantage you get from operating in one country, like say Chile, and you try and roll that up in Buenos Aires, in Argentina, it's going to be so much different because you don't have the connections, you don't have the government approvals, you don't have accordance with the local regulations, you don't have the staff, you don't have the alliances. I think it makes a lot of more sense just to go and pick the dominating lending side in Peru, in Mexico, in Chile, and we'll roll up than go and say, hey, I'm going to go from Peru and build Colombia.
So you're talking about the differences in not only business culture and laws, but also just how business works in different countries in Latin America. And you've had a lot of experience operating across lots of different Latin American countries. Can you talk a little bit about some of the things that people might get wrong if they're not from the region or haven't done business in the region about that?
I think for most business, the culture is pretty similar, and I think the biggest difference is maybe in the hiring talent. There's a lot of countries that are much more or less or are more risk averse than others. So hiring someone for a startup is a hard sell, right? I think that's one of the big cultural differences. I think when it comes to regulations, usually the business model works the same everywhere except when it's regulated. Like, for example, at Grupalia, the main thing we had was how did you recognize the taxes that you were withholding for the vendors, right? That's something that's very different from one country to the next. Going a little bit earlier than that, how do you form a company, right? I think you had, when we did this in 2010, this has changed a little bit. But you had like the extreme was Chile, where it was really easy to do it. You could do it like in maybe, I think it took us 3 days to form the company. And then you go to Brazil, and that was like 90 days of nightmares, right? Because you were always missing one paper. And for some reason, to do step number 4, you had to have done step number 5 before, which is impossible, right? So you have to find someone who's going to help you with doing that step 5 before step number 4. So you had like, that was like the whole range from Chile to Brazil, the whole difference. You had Argentina, which was closer to Brazil. You had Colombia, which was closer to Chile. And, just even forming the companies, it's a nightmare, right? So then you go to payments, then you go to hiring. Yeah, it's a tough thing to do.
So one of the things that I think is interesting when I talk to people in the US is how much lower valued a user is on maybe an ad supported platform than in Latin America compared to the US. And we talk about, for the US on Facebook, it might be $10 CPM. Chile might be $1, and then some parts of Mexico might be as low as 10 cents. Mm-hmm. Do you see that changing in the future, and potentially being kind of a long-term play, or do you still think it's going to be a long time before some of those numbers jump up to be closer to the US?
I think it's going to happen kind of fast, but I think it's not going to be something that goes on in small increments. I think it's gonna when it changes fast, it's gonna be like in a couple of months, right? I think it's gonna be when one of these media companies realizes how much revenue they're losing because they're not doing it, right, and giving out those revenues to Google or to Facebook. So I think it's gonna be a change that's gonna be pretty dramatic. I don't think it's gonna be something that's gonna be built slowly.
It's interesting because you'll see. I was looking at a company that has a lot of users in Latin America and a very few amount of users that are in the US. They're Spanish speakers in the US, mm-hmm. But 30% of their revenue comes from those small amount of users in the US, because the US users are valued so much higher for the advertisers.
Yeah, I think also one thing that should change in Latin America that is not as prevalent in the US is the role that advertising agencies play in all this. In Latin America, you have this thing called the rebate, right? Where it doesn't matter how close you are to the president of Ford. If he approves a campaign for your site, you still have to go through the agency they have their account with. And the agency will say, okay, how much are you going to pay me for this? And you're going to say, why do I have to pay you if I already did the contract with Ford? And unfortunately, that's the tradition, and that's how business is done with the advertising agencies. So you have to play and pay. So I think at some point, companies are going to get fed up with this, and they're going to move the agents from the middle, from the intermediary role. Yeah, but I think that's gonna be driven by the company seeing how much more bang for their buck they get from online advertising, right? I think they still haven't realized how much more conversion they get or how much more time is spent online than is on traditional media. So I think once they realize that and they see how little they're getting from the agencies, I think they're going to be the ones pushing for change.
Yeah, I think you're right. And it makes sense too. I mean, it's kind of crazy when you look at to buy just a straight banner that isn't even really clickable and trackable on a static website for one of the big newspapers in Chile. You could reach the entire country of Chile one time on Facebook for the same cost of having that. It's just crazy that still works.
Yeah, it makes no sense.
So you were at Navint for 4 years. Were you living in Argentina the whole time, or were you moving around?
I mean, I was living in Argentina as my domicile, but I probably spent around a week and a half to 2 weeks on the road every month. Our main market of the ones I saw was Mexico, so I was probably back in Mexico every 6 weeks, and I tried to in between go to either Peru or Ecuador or Panama. We had the other sites. I never got to go to Venezuela, even though we had a site there. It was just a little bit too adventurous for my taste.
Yeah, now it would be way too much.
Yeah, hope things change there.
Yeah, for sure. And so what was it like doing that lifestyle of running around all the different countries, managing the different sites in each country?
You know, if you look at it from the outside, it's completely crazy and ridiculous, right? When you talk to anyone and say what you were doing and say, that's just the stupidest thing I ever heard, right? Why don't you just stay in an office and travel every 3 or 4 months, right? I think once you're involved in it, it's as natural as commuting to your office. I felt when I went to the Mexico office, I felt like I was stepping into a normal office. I didn't think like it was a business trip. It's just you become really ingrained on the business, and I think that's also part of how we were able to really create one company and not separate companies in each country. In that this traveling I did, and also having country managers come, they usually came to Buenos Aires maybe 2 or 3 times a year. That created a sense that they were part of one company, right? And that they weren't just some acquisition that was somewhere far off. And that gave them a sense that they had a link and they were heard here in Buenos Aires, and they had a plan on how the business was growing. So I think that's it's not for everyone, right? But if you're willing to make the sacrifice, I think the payment is tremendous.
You made an interesting point about the different countries feeling like they were part of the decision-making process and being part of the bigger one company. And a lot of our companies that we invest in will have an office in Latin America somewhere and then an office in the US somewhere. And we struggle with making sure that it feels like one company and that they're all in it together. What were some of the strategies that you used when you were managing all those different countries all at once?
Well, I think, first of all, I tried to blend with the local team. So I didn't like it to be like some big production whenever I came to town, which usually happens, right? Like, oh, the VP, or whatever is coming here, so we have to build this whole agenda around him and have one-on-ones and do all that. I didn't do that at all. All of our interaction was more casual, so that they felt like I was just one more guy in the team, right? And not just someone they had to give tribute to or something like that. So whenever I travel or visited an office, I would give them an update on the whole business operations, how we were doing, be as transparent as possible with the numbers and what challenges we had. And that just gave a tremendous idea of them of what we were building, right? Because many times employees don't even know that there's more than one company, right? They have operations in Peru or in Brazil or somewhere else, right? And just also, it's also something that's both aspirational and rewarding for the team to know that that what they're doing has an impact beyond where they're at, right? It's not what they're doing for Peru or for Ecuador or for Panama. It's only doing for a company that's the whole region, right? And we also try to put in a little bit of a healthy competition between the countries, where I would tell them Peru is doing this, so why can't Panama be more like this? Or Ecuador, we've reached these metrics. Why are we going to do this in Mexico? And that really got them going. I also tried to, whenever possible, have someone that wasn't within the management team, but more in a commercial staff or a back office staff, travel to another country and just to exchange some practices with them, some benchmarks what they were doing, and really they had like a reference. So at some point maybe they came into a problem that they hadn't had before, but someone in another country had seen it before. So we just connect with this person. Hey, I'm seeing this. Have you seen something like this before? Can you help me? And that created like a whole larger family, right? And not just the guys you were sitting next to.
And did you have to manage cultural differences between the workers in, Chile versus Argentina? The workers are very kind of different.
Yeah.
Do you have that with all the different countries? And how did you manage that?
I think, yeah, for example, Mexico, right? Mexico, we had the sales team. They had this team where at 9:40 a.m., no matter what was going on, they would take a break and go out for a nice breakfast. And that was something like in their whole culture, right? It's very hard to say, no, you cannot do that, right? So that's something you won't see in Peru or in Ecuador or in Argentina. And at some point, we tried to unify our sales team practices. So I remember the person from Argentina traveling to Mexico, and she calls me really upset, saying, this team is worth nothing because 9:30 they decide they're going to drop the phone and they're going to go out and have breakfast. And I said, unfortunately, you have to work around that, right? You cannot impose whatever you think is correct. And I think people, they don't want to be part of a military regime. They want to be part of something where they part of the solution and where they, they put part of the answers to the problems. So, when we say the problem we have with you going out at 9:30 a.m. is that this is the prime time for calling. So how can we build around this so that we don't lose this time? And, they came up with their own answers and they come with their own solutions. So I think any cultural difference can be worked around. It's just a matter of having the input from the locals, right? And not trying to decide from 6,000 miles away.
Yeah, no, I think that's key. I mean, you can't, every country is going to be different. And like you said, you can't just come and be the dictator because then you're going to end up with massive staff turnover and no one wants to work in that.
Yeah. I think that one of the greatest things we did with this office was that you could close your eyes and open your eyes, let's say in Quito. You would close your eyes and open your eyes in Buenos Aires, and you would know you were in the same company, right? It wasn't just the decorations or whatever, the colors of the office. It was more the I would say the profile of people we hired and the kind of camaraderie and the culture. It was just so similar that you knew it was one company, right?
And so you were there for 3-4 years. How did you decide it was time to move on, and how did you decide what to do next?
Well, I came in with a very one learning I had from Grupalia was that I think I hadn't negotiated my package well enough, right, with the founders. I think I came with open eyes when I did Navin, and I had a very clear idea of what I wanted, and I asked for that from the beginning. Unfortunately, by the 4 years, I had built a big enough business that warranted what I had asked in the beginning. And the founders, they decided that, that they weren't willing to part with that. So I said, well, I respect that. It's just that I'm not going to stick around if I'm not getting what I was promised in the beginning. So I said, it's time to move on. And I think it's time to try and do the VC thing. I've built enough experience and I have enough context to give it a go. So that's why I decided.
A lot of employees in Latin America starting to work in tech, it's probably their first tech job. They may have seen some stories about, stock options in the US. They might have seen profit sharing. They might have seen perks, all those sorts of things. What advice can you give a Latin American that's thinking about coming to work in a LatAm tech company about what to ask for when they're coming in as more of like a senior role?
I think that's one huge difference between Latin America and maybe US or even European companies, is that options are really, really little understood, right? Even when you give them to an employee, it's very few that actually value them, right? Or understand what's the context of them. I think also part of it is that it's very normal for companies to be very little transparent with that, with how much those options are worth, right? For example, they usually tell you have 5,000 options and your strike price is $1. And that's the last piece of information you ever get, right? So you're always in this enigma as to how much are my options worth, what's happening with the company, should I stick around? And I think a lack of information is something that's a hard thing. So one thing I would ask an employee that's going to a company is, do you know how often the company is going to tell you your options are worth, or how open are they with the information? Because, if they give you 100,000 options, but you never know how much they're worth, they're worthless, right? Because you have no idea of the value you're sitting in. I think also another thing that I've seen in Latin American companies is that Mercado Libre is a shining example of something that they did right that I haven't seen replicated. Is that they're the one huge Latin American company that really created a lot of wealth for their employees. Right? It wasn't just one or two guys getting rich. It was in the tens of employees, right? 20, 30 guys that made really well with that IPO. You don't see that happening with companies like Despegar or with Globant, right? Those were companies where the founders made a lot of money, but the rest of the employees, they had to gain some extra money, but it wasn't a life changer. And I think that's one thing that it's something culturally we're missing, that people are not used to sharing that wealth, right? Really distributing those options is something that I think the founders are a little involved with, and I think it's also that in a lot of cases, the investors are not as well involved with as they should, right? They should be the guiding light in that with the founders, even though the final decision, I think, should come from the founders. We should really push more on having those guys really build a team and bring people on, because I think that's something that in the long term really helps you build something that can stand for a long time.
And so what kind of stuff do you tell your companies that you invest in that they should be doing?
I always try and see when they're being someone and they say, we're going to offer him some stock, right? So I said, are you sure that they're going to value the stock? Because I think stock options are not for everyone, right? It's also a little bit subjective, right? I think there's people that are going to prefer getting something like a retention bonus, where you can tell them, you're going to make $100,000 in 4 years, right? I'm going to pay you $25,000 for every year you stay in the company. I think that's much more tangible for them. That's saying you're going to have this piece of paper that could be worth $5 million, but who knows, right? It can be a personal situation, it can be something like that. So I think stock options are not the solution for everyone, and I think a company should be more flexible in that, right? And realize who's going to react better to the stock option, who's going to react better to a retention bonus or a deferred bonus, or something that's more tangible to them. And I think we should take that into consideration before just saying, we have a stock option plan and that's our only marketing mantra.
And what other things do you think venture capital investors in Latin America can help do to make the ecosystem? What kind of rules and things like that you think that we should be pushing, either in investment terms or types of companies or anything really?
I don't know how it's in the US, and I would love to get a better idea. Maybe you can tell me. But one thing I see Latin America happening in a few ecosystems in a few countries is venture funds are playing a little bit of a clubby game, where they try to sometimes go behind the founders' backs and try and form a small syndicate or a more small coalition where they're going to set the price and do whatever they want, right? That's something we've always been against, and when we've been proposed doing that, we always tell the investors, we don't do that. We will never do something behind the founder's back. So if you're willing to say this in front of the founder, we're more than happy to discuss it. But if you want us to go behind him and do something, we're never going to do that. And I think too many, because there's just not enough venture funds, and funds sort of are, they know each other and they have friendly relations, and they try and build this us against them mentality, and I think that's the wrong way to go about it. Right? I think we say that we're not founder friendly, we're founder focused. I think friends at some point it would be great to be, but on the first stage, what we try to do is get the founders to the best possible position for them to have a successful company. So I think we're always thinking about the founder first, and I think that's a lot of that's the thing that a lot of funds don't do.
Yeah, I think in the US that can happen a lot more in kind of the second tier and below startup cities where there's not much competition. Mm-hmm. Just like in Latin America, it's kind of interesting, the parallels of Latin America to a place like Madison, Wisconsin, where I'm from, where there's not many investors, there's a few angels, and there's not as much deal flow, but there's a good ecosystem and there's good companies that are coming out of there. I would say that in a place like New York or Silicon Valley, the likelihood that you're going to have the investors kind of trying to screw over the founder on an early stage deal is fairly low because there's so much competition for good deals. But you get other problems in the US from that.
I think that the flip side is that in Latin America you don't have a lot of natural competition just because there's not enough funds. But which is good for the funds because you have a pretty good chance of landing a company you want, right? But at the other end, I think it would be better to have more competition so that these things naturally wouldn't happen, right? I think if you don't make a concerted effort against doing it here, it's very easy to fall into the trap.
Yep, I agree. There's just so few actors that are actively really investing across the region that it's very easy to run into almost the monoculture, which is not ideal.
Yeah, definitely.
And so, what's the Mexico and Argentine ecosystem like? That's kind of your main focuses today, it seems. What are they like? What's the similarities? What's the differences? And why do you like those markets?
We think of Latin America as being four distinct markets. One is Brazil, the other one's Mexico, the other one's Argentina, and the fourth one is the rest, right? And I don't mean it, as something derogatory. I just mean that there's not a fifth market that's clearly distinguishes itself as being one country. I think Mexico and Brazil are very similar in that they're both very insular. So both Mexican and Brazilian entrepreneurs tend to focus heavily on their local market at the beginning, at least. And I think also they don't have a great track record of going outside of their home country, right? They also have the advantage that those markets are big enough to sustain a business. So they also could do without going outside, right? I think Argentina is the exact opposite in that it's a very unstable country for the last, say, 20 years, 25 years. So entrepreneurs from the beginning are thinking about doing something regional and just scaling up from Argentina, right? So there's a whole different mindset. And also they have the benefit of having a lot of role models to follow on, right? They have the Despegars, they have the Mercado Libres, they have the OLX, they have a lot of those. And I think the rest of the countries like Chile, like Colombia, like Peru, I think they're becoming better at building a local presence, dominating that, and then going outside. But they're still focusing a little bit too early on going outside, right? Before they have a clear product or clear business model. But I think that will change, right? I mean, in the time I've been doing this, I think all the markets have become better. I think Mexico has made incredible strides just because there's more capital. And there's also more and more, I wouldn't say success stories, because for me, success is when you have a great exit. There's still very few exits out there. But you have some success stories about companies raising higher rounds, having a lot of traction, attracting US-based investors, doing a lot of that. And so I think Mexico, to give you an idea, I think Mexico would have been probably 10 years behind Brazil, even 4 years ago. I think right now Mexico is probably 3 to 5 years behind Brazil. And Argentina, even though it's had a difficult period in the last 15 years, technology is something that never went away. You still had in these 15 years, you had a company like Global come out of nowhere. You had OLX. So the strengths of the country are still there. I think it's always been lacking capital because since the 1990s, when after the crisis, there was almost no capital coming from the outside. So I think Argentina is going to catch up really fast with Brazil. And I think in the next 3 to 4 years, it should be right on par. And I think the rest of the countries, they have the problem that it's a smaller market. I think Chile has an advantage in that it has one of the most sophisticated financial markets in Latin America. So you have a lot of players like the insurance companies, you have the pension funds, you have the family offices. So I think it's going to build a local base, and it also has a very well-educated population. Still a small market, but I think they can emulate what Argentina is doing. And then you have Peru, which unfortunately very limited to Lima. And you had Colombia, which is it's a little bit too widespread. So you have a real hub either in Medellin or in Bogota or in Cali. You have a little bit on each one. So I think that needs to coalesce in one of them. I think one big difference between Mexico and Argentina, where we're mostly focused, is I think Mexico and in general, most Latin America, you have a big problem with entrepreneurs in that there's a huge opportunity cost in going to entrepreneurship. Most entrepreneurs, or most of the successful entrepreneurs, have a bit of a U.S. education or a U.S. background, having worked there, and they're pretty expensive talent, right? So these guys could be having a great corporate career at an American Express or a Coca-Cola or a Google, and to give up that check and go into entrepreneurship, it's hard because there's not that many role models, and it's tough going, right? So entrepreneurs, you're not attracting the best quality entrepreneurs. You're attracting a lot of entrepreneurs, not necessarily the best ones. So I think in Mexico, you have a lot of entrepreneurs that are not as high quality as some other places, but you have a lot of capital. So that's also funding these guys even when maybe they should be funded. I think in Argentina, it's the other way around. I think for a long time, it's been hard to have a corporate career in Argentina. So you have a lot of talented guys that, their cost of opportunity is much lower. Getting paid what they would be paid at a corporation here and going to entrepreneurship with a chance of hitting it big, when there's success stories like the Marcos Galperin or the Despegar guys, it's worth a chance. So I think that the quality of the entrepreneurs in Argentina is higher just because of the relationship between cost of opportunity and the depth of talent. The problem you have in Argentina is the opposite of Mexico. You don't have enough capital, right? So from the start, you have to struggle getting some capital. Maybe a lot of the best funded startups here find money outside, not in Argentina or in the region, even in Europe or in the US. So it's a whole different mindset. Also, Argentina is farther away from the US. So even though it has a better reputation in Silicon Valley, it's harder for an entrepreneur to go there. Well, I think Mexico is pretty easy, right? It's a 4-hour flight to go to Silicon Valley. So I think that there's a couple of differences. I think Mexico should improve its quality of entrepreneurs, as you have some success stories where you see people making money and they say, this is a feasible thing to do. I'm going to give it a shot.
And so where do you see the investment opportunities if you had to pick, one country and said, what, I'm going to focus on one country for the next 5 years? What would you pick?
It's difficult because I think Latin America has, aside Brazil, because of the size, there's not one country where you could say, I'm just going to focus on this one, right? I think between Mexico and Argentina is probably the better choice right now, just because it's less penetrated. So you would have a better chance of building a brand name and just establishing yourself as the go-to investor. I think Mexico, there's more competition, so you're going to have a harder time. And it's also there's less entrepreneurs that are creating something that is worthwhile. So I think if you had a choice between two, I think Argentina would be the better choice, just because the potential is higher right now. I think Mexico is a little bit further down the road and it's more competitive right now.
So talking about companies in markets, what are some of the more interesting companies that you've invested in and worked with over the last few years? I
think in our portfolio we have 8 companies, and one of them has been a write-off. So I think even though that's not a success story, obviously, I think we learned a lot from that venture. One thing is we learned to be very disciplined. That's a company that probably could have gone on for 3, 4, 5 years more, but I think there's nothing would have changed on their operation, right, on their numbers. So I think they're very disciplined in that we had some great investors there. There were angel investors with very deep pockets who were willing to fund this for a long time. And they were looking to us and saying, what do you think, right? Should we do it or not? And, we were tempted to keep it going, right? Just because for us, there was an incentive to keep the company going and not show a write-off. But we also thought this is a multi-stage game. And it wouldn't be worthwhile for me to give these investors a go-ahead. And then in 5 years, they come and complain to me, hey, why did we keep it going when you knew this was going nowhere, right? So we were very disciplined on that, and we took the tough choice, which was shutting it down. There's a bunch of zombie companies in Latin America, right? Companies that are, they make enough money not to close down, but they're never going to grow. But it's better to, just because there's still a huge stigma with failure here, people prefer to just keep it going. I think we decided to bite the bullet and just close the company. We also had a great experience in e-commerce. We learned a lot about what an e-commerce company can be like in Latin America, how much money you actually need to do that, and the sort of a roadmap you need to follow. So I think the next time we invest in e-commerce, it's going to be with much more wide open eyes, and it's going to be a much better job. Setting aside that failure as the best, I think the best learning experience we had, there's other companies where probably we haven't learned as much just because they're doing great, but it's also been a tremendous experience. For example, in Mexico, Confio, which is it's a working capital lending company, lends to SMEs. I think these guys, they've done something that we've noticed is a distinct trait of the companies that make the leap to being, possible unicorns or possible, success stories or references. The founders have been able to attract people that are as good or better than they are. And when you look at companies like Globant, like Mercado Libre, like OLX, I keep coming back to them, you see that the founders had that ability, right, to care more about the company than care about more their personal role in the company. So you see a Marcos Galperin who surrounded himself with top-notch MBAs from the best U.S. schools, guys that were doing very well in other companies, and he was able to convince them to work with him. So I think that's a great distinction from companies that are really on the brink of making it, is that the founders, they're able to bring in talent that's way and above what they could ever expect.
That's interesting. On the talent side, do you see any other characteristics from some of the best companies you've been able to work with?
Another company we have in portfolio is one called Solvers, which is a marketplace for cleaning services. And cleaning service, unfortunately, because of Latin American idiosyncrasy, is almost 100% women, right? So it's a company that we didn't set out to do with a social impact idea, but it's a tremendous collateral benefit we found. it's doing good by it's doing well by doing good, and that company is one thing. It's one company that we were surprised at how the business model has been evolving. Originally, the business model was just a marketplace, but as we adopted more and more cleaners in the database, we were up to over 200,000 right now, and we had over 80,000 people hiring these services. We saw that probably there was more that we could do with that database and really start to monetize it. So one idea that we came up with was, how do we create this as something that can really help just beyond getting them a job, right? So one thing we saw missing is financial inclusion in Latin America. It's a huge topic. It's a hot topic. It's one of those things that are very much in vogue right now. And what we saw is that we had a lot of information for a very, I would say, underserved part of the market, where there was no other way for financial service providers to get there, right? They don't know who these people are. They have no reference in them. These people, most of them, I mean, I'd say 80% are unbanked. They have, they have probably not even their domicile is up to date. So you have these people that we have a lot of information on them, and these people, we know when they work, we know how much they make, we know how often they go to work. So we have the ability to build a credit score for them and start giving them a bank account, a debit card, a personal loan. So we started doing that, and it's really transformed the business, and it's also you seeing an impact, right? And I think it goes beyond the financial rewards. It goes in just seeing the people that they write an email saying, this has changed my life for the better. I couldn't afford before to help my child have his own room. Now I'm building a new wall within my home, and I have a new room for him. Things that are really emotional, and I think it's a great part of doing this sort of things, right? But I think that's also very dependent on the entrepreneurs, right? Entrepreneurs have to really believe that there's something more than what's just in front of them, right? If we hadn't had entrepreneurs like Cecilia, who's someone that's an amazing entrepreneur, she was able to see how she could really impact these people just because we listen to her. She's the one with the boots on the ground. She's the one that's holding these events every couple of times a week, where she's meeting with these people, and these people, they have necessities that are way and beyond what we can imagine, right? These people are really living in the margins of poverty, and have these things can make a huge difference for them, and that's something that's really rewarding.
Yeah, that's really cool. So what advice would you give yourself going back to when you started the fund and started VC investing, if you could go back knowing what you know today?
I think I would have warned myself about how much time fundraising takes you, and how much is something that never goes away, right? I haven't had a large fund, so I cannot say what happens when you have a $100 million fund, a $400 million fund. Probably it's easier. But when you're doing a small fund like we are always looking for the next fundraise, right? Because it's so hard that you never know if you could be pitching to the next investor in your fund. So I think it takes an incredible amount of time, and it's something that you always have present. And unfortunately, it's the way it is. It's not something that I like, but it's the way it is, and you have to live with it, right? So I would be much more cognizant of that, and be more active in that. I think, fortunately, the other parts of the VC investing part, I'd say the looking for companies and the helping those companies gain traction for a next round has come much more naturally. I think there's some things we've done well, but it's also just the development of the ecosystem, right? It's becoming more prevalent and more on top of the mind of investors. So it's easier to attract people to come into this follow-on rounds that are bigger. I think that would be part of my advice. I also think that the idea that we have of really sticking by entrepreneurs is the right one. I would try and not change that at all. I think that's our for me, that's our calling card.
And do you have any books, blogs, podcasts, documentaries that you recommend to your portfolio company entrepreneurs, or just entrepreneurs thinking about starting up, that you think are useful?
I mean, I think there's not one particular blog or book I follow. I think I'm very curious about whatever's written on VC or in entrepreneur dynamics. So, for example, I think for VCs, and unfortunately, this is something that you cannot recommend because most VCs probably would be insulted if you did it. But I think it would help a lot of them if they ever read there's a book called, the Bradfeld book called the VC Venture Deals, right? I think I could honestly say that 99% of investors in Latin America have never read it, and they would all benefit from doing it. Because, when you're discussing the difference between a convertible note and doing equity, it's incredible the responses they come up with, right? But like I said, if you recommend that to a VC, he's gonna get insulted. And he's gonna tell you to go screw yourself, right? So, so you cannot do that.
We actually gave that book translated in Spanish to some people that were thinking about starting to be angel investors in Chile. I think that's just one of the best books that's out there.
I think it's incredibly pragmatic and easy to follow. And what I do with that book is I do recommend some sections to entrepreneurs when they're discussing their round, even with me, right? Because I think that's another thing. Unfortunately, VC has kept this aura of glamour or magic that it doesn't have. So it's very hard to find someone that's forthcoming with what's actually a deal term or how things are done, right? People prefer to do it in the dark and say, this is the way it's always been done. So I think helping entrepreneurs is something I really enjoy. Even when I'm not even thinking about investing in them, I really try to help them on what's the deal terms like and what they should be thinking about. Just because, I don't like people get themselves screwed over, right? And I think, unfortunately, because of the asymmetry of information, VCs take a lot of advantage of entrepreneurs here in the region. So I really do. I think what I recommend most of entrepreneurs to read is usually regarding fundraising. I think running a company, I love the Andy Grove book.
High Output Management.
That one, yeah. That book, I always recommend it especially when they're doing a large round. So I said, once you get the money, you have to start thinking about this, right? About putting a right team on the ground and getting people to follow your direction. And I think this book really builds that up. I think aside from that, the typical blogs that everyone reads, like the Both Sides of the Table or a VC, those blogs are interesting for me. I don't know if I would recommend them for an entrepreneur. Sometimes they're just boring stuff. But for example, I love the Amazon annual letters. I don't know if you're a fan of them. It's an amazing consistency in how Jeff Bezos had one vision from 21 years ago, and he's just kept at it, right?
Yeah, I haven't reid those actually. I should check it out.
Well, you should read the one if you want to start by one, do the one he did this year, because he starts the letter saying it's still day one, right? And he goes every year, and along with the annual letter, he publishes the first letter, just so that you see that it's the same vision from day one. So I would definitely recommend reading that.
Yeah, I'm definitely going to check that out. The other one that I like, you mentioned Both Sides of the table. I like Mark Sister's Snap Storms, where he saves all the quick kind of high impact content. I wish someone would either just translate direct into Spanish and put them out, or do them themselves, because would be huge uptake in Latin America.
Yeah, I think, for example, one thing I haven't had the time, but I think I would like to do at some point, is to set up some free workshops just to help entrepreneurs understand the other side of the table, right? Because I think a lot of times we're discussing about things that is just pure ignorance, right, on both sides. And you don't have the time to really educate the entrepreneur, nor I think is he willing to have himself be educated. So I think if we come all with the same sort of level playing field, it would be much easier to do deals.
For sure. Because sometimes even when you're offering a very standard term sheet, the entrepreneur might see something like, it's not happening as much anymore, but 2-3 years ago when we were first starting, we'd have vesting in there and people would freak out because they thought, like, well, you're making me give my shares back. What's wrong with you? And not understanding that it actually can benefit them, and that it was actually something to protect not just us, but them as well.
Yeah. I mean, another thing you also have sometimes there is lawyers. Unfortunately, there's very few lawyers in Latin America that understand VC, but they always will tell their clients that they're experts, right? So you end up having these discussions with a lawyer where you see that the guy has absolutely no clue what he's talking about. For example, I remember having a discussion with a lawyer that insisted on us giving him a binding term sheet, right? And I said, there's no binding term sheets in VC, right? You can do that in private equity. No. This guy, the guy even was asking me to have a part of the signing of the term sheet, us with the first payment for the entrepreneur. I was like, this is completely ridiculous. So, and these guys, they will defend their client like, this is the way it's done. Your VC is just trying to screw you. So I think there's a lot of people to be educated on this just because it's so new.
Yeah, I think there's a lot of education that needs to happen, and that is already happening, which, I think the difference between when I got to LatAm in 2010 and now, compared to entrepreneurs knowing what they're talking about, way better. I can imagine you've been at it longer than I have. I'm sure you've seen that same sort of curve keep going. So I'm glad that there's people like us in the region who are thinking that same way and helping to kind of push it forward.
Yeah, I think. I think you also see that it's not just the quality of the entrepreneurs that is increasing. I also think the investors' quality is increasing, and I hope that one thing we'll see in the next 2-3 years is a lot more new investors coming up. I think one thing that we have in common also that it's rare in the region. There's very few early stage investors that have operating background. So I think that's something most of the investors we look at are either ex-investment bankers or ex-consultants. So they have great analytical skill, great strategy ability, but really very little pragmatism when it comes to growing a company. So I think that's something I look forward to having. As small companies get to exits and get some money into people's pockets, that these guys transform themselves into investors and help spread that out.
Yeah, that would be great to see, and I'm selfishly hoping that it's some of our portfolio company entrepreneurs get a nice exit and then start to compete with us. It would be amazing. It would be the best thing to happen.
Absolutely. I mean, one of our wishes that for our third fund, we have as a new partner, someone that we've invested in before. That would be like our wish come true.
Yeah. Well, let's hope it happens. What's next for you guys, and where can people find you and your firm online? I mean,
we're now raising our second fund. The idea is to scale up what we've been doing so far. We're trying to raise this fund so that it can be operating in the first quarter of next year. We'll see how the fundraising goes. Unfortunately, it's something that's usually outside your control, but we're making our best efforts to get there. We have a webpage, unfortunately, with very little information, but it has our main investment criteria and a contact tab for us. Otherwise, I have a Twitter handle. Unfortunately, I don't tweet much about entrepreneurship. I tweet about all kinds of stuff. Sometimes entrepreneurship, but I also do personal stuff there. Otherwise, the best way to reach us is through someone that we mutually know, right? We think that in this day and age, if you cannot reach us through a combined connection, you're probably not going to be very good in finding money for your company. Yes, because it takes a little bit of effort to go into LinkedIn and see that you're 2 or 3 degrees from me. Probably someone's going to be able to introduce you. If you cannot do that effort, I don't think that I have a lot of faith in you being able to go the extra mile and build a large company. So we like seeing that initial effort, and after that, we're always more than open to speak.
Awesome. Well, thanks for taking the time to have this conversation. I think it was really interesting, and I can't wait to put it out to the public.
Likewise. My pleasure.
Thanks again. Have a good rest of your day.
Take care.
Thanks again for listening to this episode of Crossing Borders. I hope you enjoyed it. Wanted to give a special thanks to Ender and Santiago, who wrote a really nice review on Stitcher. Thanks for listening and reviewing Ender. If you like the podcast, please take a few seconds to either subscribe on iTunes or Stitcher, share with a friend, or even better, write a review. It's the best way to share these amazing Latin American entrepreneur stories and helps the podcast grow. Thanks again for listening.